Welcome to Forex School Uganda. I'm Godfrey, and if you're here for the first time, kindly subscribe, like and share the video as I continue to bring you more educational content on this channel. You could also check out forexschooluganda.com for educational articles to aid your learning and understanding of the Forex markets. Today, I'm going to do a breakdown of the Australian dollar USD pair for the coming week to see where price is at right now and how we can position ourselves to take advantage for any shifts and turns that occur within the market and how early we could time them. This we are going to be doing by first breaking down the market structure and doing a top-down analysis so we can have an eagle's view of the entire market as a whole, as opposed to having bits and pieces within particular time frames. No. We take a top-down approach right from the higher time frames, and then we drop to the lower time frames where we will be preparing ourselves for such shifts and turns as we await our particular setups and patterns that we look out for in the market to form that we can then execute upon to give us an advantage over the crowd and help us maintain our edge in the market. Come with me to the charts. So this is a quick analysis on the Australian dollar USD for the coming week. We see this is the monthly time frame, and this support area is still holding. We saw price break above this minor resistance area, and it is still holding to the upside. Now, as the month is racing to a close, once it closes the way we see it in the next about 5-6 days, we will have a full formation. We will have a formation of a head and shoulders pattern. But that also aside, we will be having this W formation come to near completion. Of course, after the close, we would need a retracement back to the neckline to see it completed. But until the retracement comes, once the price closes the way it is with a bullish close, we will have a complete W formation in the monthly time frame. Dropping down to the weekly. Now, before we do that, notice it will have closed above this minor resistance area, which would solidify the market as strongly bullish. Now, dropping down to the weekly time frame, what we see is that price created an area of resistance here with this touch and this second touch, as well as a third touch here, before finally breaking above it with this bullish candle. And now with this bearish weekly candle, price retraced and retested this very resistance now turned support area, and we see that it was able to close above it, meaning that the support area is holding, keeping the market intactly bullish. And so with this break to the upside, we had an impulsive move. Now this was a correction, and after a correction, we expect another impulsive move to the upside to complete the impulse correction, impulse formation in the market. So as it stands right now, we are expecting a bounce off from this area to the upside. We are not trying to predict the markets. We are only analyzing it. We can't just randomly take trades. We will be sitting on the sidelines waiting to see if the market behavior lines up with our analysis. And then once they are all rhyming together, then we can move lower to see if we can find patterns and setups that meet our entry criteria that we can then execute upon to take buy trades in the market. So the weekly as it stands is also bullish. We are only looking for a set of confluences to inform our buyers, to help us make trading decisions in the market. Now, if I take the Fibonacci tool and measure from the low of this bullish move to the high of the impulsive move, we see that the same area that is acting as a level of support that was able to hold price upon retest to the upside is the same 61.8 Fibonacci retracement level. And so these two combined, the support area and the Fibonacci level, the 61.8, which is a golden ratio, act as a strong area of support. And so with these two confluences on the weekly, we expect price to rise to the upside. So we'll drop to the daily time frame. Now, looking at this daily time frame, what we see is that price formed this M pattern and is now testing this support area. Now, we expect price to bounce off to the upside to come and retest this neckline. Also notice this was an impulsive move to the downside, and this might be the beginning of a correction. Remember, price does not move in one direction. It doesn't move in a straight line. It moves in a series of waves. It moves in a series of higher highs and higher lows, lower highs and lower lows, and sometimes it is ranging, but it's never in a straight line. And so after a deep move to the downside, we expect a retracement to the upside. After every impulsive move, we expect a correction. That correction is what we sometimes know as a retracement, and that's precisely what we are looking out for here. And this could be the beginning of the retracement back to test this neckline here, which would be part of the impulsive move and the correction to the upside. And so the daily as it stands right now is bullish. And if we take our Fibonacci tool and measure from the high of this impulsive move to the downside to the low of the move, we see that price might come to any of these areas, the 38.2, the 50, and the 68.2 Fibonacci retracement areas. Now, it hasn't touched any of them, and so we expect these to act as a magnet to pull price to the upside to retest them. Now, that means to us that the daily currently is also bullish. Now, to add to this set of confluences, we see that price touched this support area and bounced off, closing bullish. And if this area continues to hold, we expect price to rise to the upside to come and test this neckline for the completion, the full completion of the M formation. Now, dropping to the 4 hour, in this 4 hour, we see that price dropped heavily to this area, retraced a bit before breaking back below this support area to the downside, and now it has broken back into the range of this price correction that we had before. And if you're very observant, you realize the market is kind of forming what looks like an inverted head and shoulders pattern. I'm not saying this is going to happen. I am just analyzing the charts and then anticipating what moves the market might make, that should it make such moves as anticipated, then it is easier for us to be able to time the movement of price, the early shifts and turns in the market, long before the crowd comes into the market. And so we see that this was an area of support and price broke below it, but then upon retracing to retest this support now turned resistance, price was not rejected, but instead it was able to break through. Now, once resistance is broken, it becomes support. And so right now, it will be holding as a support area, in which case, if the pattern of the head and shoulder is completed, it will be a head and shoulders pattern in the market, which is a bullish pattern, which would further add to our confluence of factors to aid our buyers. And with a close above this resistance area, it means that this entire move to the downside was a false break, or call it a fake breakout. And so on the 4 hour, we expect price to return and retest this area to form support, and then a move to the upside. But we cannot randomly take trades. We sit on the side and wait to see what the price will be acting like and what patterns it forms within the market, out of which we will be looking for the setups that meet our entry criteria to form. And upon their formation, we will be executing our trades on the basis of price action. Now, looking at the commitment of traders data, which is data released by the big players in the market. Remember, we are only retailers and our positions really do not move the market at all. It is the big fellas, banks and hedge funds, that have the capacity, courtesy of their balances, to move the market, given their huge position sizes that they place in the market. And so now, looking at the most recent filings, we'll take the last two, and we see the previous one, as far as longs were concerned, there were 40,000 long positions in the market. Now, with the most recent filing, it's a 50,500 long positions that were taken in the week. That's an increase of 10,000 long positions taken in the market. Now, inversely, we see that the number of shorts taken previously were 117 short positions in the market. However, with the most recent filing, the shorts have come down from 117 to 106,000 short positions in the market. That's a negative figure of 10,400 short positions that were closed in the market. So there was a decrease in the number of shorts. The big boys were closing short positions while increasing their long position on the Australian dollar USD pair. So they increased their long positions by 10,000 positions, and they reduced their short positions by 10,000 positions. That means the buyers, at least for the short term, is bullish. And when you look at this column composed of the net positions, we see the previous filing was negative 77,000, but with the most recent filing, the net positions are 56,000, which is a huge jump from a negative 77 to a positive 56 net positions in the market. Now, that indicates to us that there's more bullish sentiment in the market from the big boys. And so, at least for the short term, we will be looking to take buy positions in the market. And so, we will be expecting, after this impulsive move to the downside, we will be expecting a correction to come and retest this neckline to the upside on the daily. And also, from the weekly perspective, like we have seen, with price testing this support area and being held above it, we expect a bounce from this area. We expect a bounce from this area to the upside. So the buyers for the Australian dollar USD pair for this week is bullish, and we'll be looking for any buy opportunities that we can find as and when our setups that meet our entry criteria form within the markets in the lower time frames, so we can catch those quick scalps as well as some day trades within the market. That's our analysis for the Aussie USD for the week. Thanks for watching. Remember to subscribe, like and share the video, and I'll be bringing you more educational content on the channel. Just be on the lookout for any new posting that drops in, but to make sure you do not miss out, kindly click the bell icon so you are alerted as and when the new video drops in. But don't you forget to subscribe to the channel. I'll see you again.